Kunal Pawaskar is here to talk to us about markets and the way they are looking at approaching investing. Kunal, afternoon. Thank you so much for your time. At your PMS at Tata AMC, Kunal, how are you observing the earnings quality so far? Because our observation was that largely earnings are actually pretty good. In fact, in broader markets, they are better than large caps. But it's the top line growth which appears to be the weak spot on aggregate. Are you worried about the anemic top line growth or revenue growth?
Uh, so thank you for having me on your show. So we have it's even in fact just today morning I was looking at the earnings data. So it's a timely question. So there is if you look at the results released in the December quarter, I mean for whatever is released to date from the BSE 500, the median ad growth is coming to somewhere around 15%. You're right in saying that the top line growth is slightly moderated. I think this was not very far from expectations. The previous calendar year, meaning even before 23, 22 was a year when many companies bore the brunt of inflation after the Russia-Ukraine conflict started and commodities rose. It hit profit loss statements across the board, I think, more in many sectors. And in the last year, we've basically seen a lot of that reversing. So this is not too far away from where we were expecting things to be. And we're not as worried on the top line growth. Again, that's at a broader market level. We'll be also very interested in looking at what we own and what's it like there.
Kunal, I see some very differentiated, views or moves which you have done in your portfolios. I see a name from the FMCG space, one of the turnaround, candidates. FMCG in overall, I would say, especially the consumer detergent space, and like many other categories, last few quarters were low on volumes because of inflation or whatnot. But early commentary from some of the sector majors seem to be suggesting that things are turning around on rural and tier 2, tier 3 side. Would you agree with that? Are you comfortable in raising stake? Probably that's why I have that. I can see a consumer detergent name in your portfolio.
Correct. So without, I mean, I'll not be able to talk about names, but the reason that we were attracted to it, so in general, we like situations, we like participating at the ends of the spectrum where changes are happening and you are able to pick things which are maybe under a cloud of pessimism. Earnings may have slightly slowed down for whichever reason. In some names we were able to participate meaningfully in, including this one. There was commodity pressure in that calendar year 22. Again, something that I referred to in the first when we spoke about the first question, and that is on the mend. So whatever we saw, which was very transitory in the year of 22, reversed. So you saw healthy gains on the volume growth side. Volume growth indeed on the FMCG sector commentary. When you look at that, there is some cooling off in terms of volumes. Rural side of things has to improve a bit. I think that may take some more time, but what we're interested in is looking at pockets where growth is healthier than the rest of the pack, and I think that's where we focus on. So at a sector level, there is a bit of slow growth in FMCG. I think some of that should pick up in some time. But as I said, we are more interested in the specific ones where it's even better.
Okay. Kunal, what are your thoughts on capital goods? I see a very good, you have almost 16.5% allocation to capital goods. What I want to understand is that this is a completely, area which everybody knows about, discovered. We know the size of the opportunity, tailwind is pretty large. How are you analyzing the valuations versus earnings which some of these companies are posting?
So thanks for pointing this out. It's a sector we like. We've been writing about this, in fact, in our communication for multiple quarters now. In fact, more than even 1.5 years ago. We took this stance that the investment cycle in India is shaping up well, that one should be participating in this. We effected changes to the portfolio in that direction too. So weightages towards capital goods area increased, manufacturing area increased even. When it comes to that sector, what we'd like to do is maintain weightage, which is reasonably, it should be meaningful for the portfolio. We do take a measured view with respect to valuations, as you rightly pointed out. So within capital goods, where valuations have inched up beyond maybe your comfort level, we have even taken exits in the preceding calendar year 23. And at the same time, even after those exits were done, we have even added more into some other areas which derive growth from capital goods. So Valuations are definitely more punchy than they used to be. But what I find interesting in that entire space is they see it's undergone a period of almost neglect for the preceding decade in the 2010 to 2020 period. There are many companies which literally are coming out of the woodwork where expectations were low, and I think even right now there are pockets where I think there are interesting situations even right now in capital goods. And the interesting part about the space is that we as an investment investment community and even our clients, I think what we are going to see is surprises that continue to come from that.
Very interesting. Kunal, one last word before I let you go. Power. I want to understand, there are some power generation legacy companies also in your portfolio which are now talking about listing their green arm. But I want to see your views on the overall power value chain. Traditional legacy
Okay.
companies who have green arms, or some of the renewable companies recently got listed, some turnarounds there, or generation power transformer, generation related power transformer type of companies, or cables or wires, heavy cables. How are you approaching the entire value chain, or do you have a basket approach here?
So there are areas we have been getting into power sector from the last 18 to 24 months. We've increased exposure in the calendar year 23, and I think the reasons for this are, as you point, I mean, so headlines that we all saw as citizens of India. We had deficits in the year 2022. We had again deficits in around the August-September period 2023. Uh, the country wishes to move forward in the manufacturing area. We need to have a stable power demand supply environment. And I think if you look at stats, so around 10 years ago, and these are figures from the government websites, the installed capacity addition used to trend at 10% year-on-year growth. That number, when we came into the 2019-2020 period, even before COVID happened, that number was around 3% mark. So we slowed down in terms of installed capacity addition, and that's happening now. Also, we should see this in light of the reforms that are happening in terms of improving health of the distribution companies. Because when smart meters get rolled out and that number of 25 crores over the next 3 years, billing gets better, losses come down. If the health of the distribution companies improves, they are able to pay the generation companies on time. Generation companies can set up capacity that they want, that the country needs, and with this, you're going to see, I mean, there's opportunities in the power financing area, the generation companies too, and a lot of things that plug into and supply. So we participated, I think, across things because we just liked it so much at the top-down level that we thought we should participate in multiple areas within power, and we've done that.
Kunal, before I let you go, which to your mind is the most undervalued and ignored space in the market where risk reward is looking attractive, because most of the negatives are already priced in now? Is it chemicals or any other?
It's a good one. When valuations have been rising across the board in the last 6-8 months, there are pockets in chemicals. I'd agree with you there. There are definitely pockets in chemicals. I think some things on the textiles area may be still even interesting, though I think the earnings have bottomed in some pockets in the last 2-3 quarters. But I think there's more to come there. I think this also aligns with our view on the manufacturing side. Labor-intensive manufacturing is something I think that our government is taking steps on, and this should help us in the coming year. So I think these are pockets which are typically they don't attract. They're not up there in the headlines all the time. So textiles is a large employment creator even today, but I think there is more that can happen there in the future.
I will let you go on that one. Thank you so much for your time this
Thanks a
afternoon.
lot.